Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Palantir Technologies PLTR stock and why the stock price has currently fallen based upon the recent Q4 and full year 2021 earnings report which just came out recently. We're going to be going over the metrics that Palantir should have brought in for this report, why we actually got good news for this report, and even after we received good news, why the PLTR stock ended up falling. We're also going to be going over the latest news for Palantir Technologies, while also going over the latest price predictions according to analysts. So for more videos like this one, remember to go and smash that like button right now for more videos on Palantir Technologies. Subscribe if you are new, comment your thoughts down below about this recent earnings report and what happened to the PLTR stock today, and without further ado, let's get right into today's stories. We're going to start off talking about Palantir's fourth quarter earnings report and how they did better than expected, especially when it comes to the revenue estimates, which leads us to believe that they will have very positive revenue estimates for Q1 of 2022. We're also going to talk about how their sales growth, specifically for their commercial segment, has improved dramatically and how it will eventually outpace their government segment. On top, about when Palantir could actually reach profitability sometime in the near future, depending on what management does, because management can actually make Palantir a profitable company very soon if they wished to. But now I want to go over what their expected revenues, earnings per share, and cash flows were supposed to be. From a previous article and video I did, we know that in Q4 of 2021, the revenues for Palantir Technologies was supposed to come in at $418 million, which would imply around a 7% increase quarter over quarter. Luckily for us, they actually beat this revenue projection and ended up bringing in around $432.8 million, which represented a 34.4% increase year over year. So if we can compare that to what analysts thought the company was going to bring in, which was only $418 million, they actually had a fantastic revenue beat, which is good news. However, on the flip side, for their earnings and EPS, that was supposed to come in, according to analysts, at 4 cents per share. But the bad news is that Palantir Technologies actually only brought in 2 cents per share for their EPS, which missed analysts' projections by around 2 cents per share, because they ended up bringing in 2 cents per share for their earnings per share, also known as EPS. And although this isn't a huge disappointment, it is a miss on their earnings per share, but to me, the revenues is really what I wanted to look at, on top of what their free cash flows were supposed to be brought in at. Now I want to get into why the stock price is falling and what we could anticipate for Palantir's future. So if you didn't know, Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government agencies. The current PLTR stock price has fallen around 10% after this earnings report, and it currently trades for around $12 per share. The low-end 12-month analyst price target for the stock is $13 per share. The average analyst price target is $20.17, and the high-end price prediction among analysts is $25.30 for Palantir Technology stock. So although Palantir actually had a revenues beat for their quarter-over-quarter revenues as well as their year-over-year revenues, on top of beating analysts' predictions, they also beat free cash flow estimates by analysts, on top of increasing their overall percentage revenues from their commercial segment. The only thing that they didn't really perform too well in is their earnings per share, or EPS, which, like we said earlier, missed the consensus by around 2 cents per share and maybe a little bit of their margins. However, their revenues easily beat the estimates, and that's really what I wanted to focus on. I wanted to focus on their revenues as well as their free cash flows. And for their revenues, this would represent around a 34% increase year over year, while earnings per share came in half as high as expected. But the strong revenue performance that Palantir has brought into us indicates that the business model is intact and it is working. It's working so well that it actually outperformed what Wall Street expected from this overall company. And for their earnings per share, the profitability for Palantir Technologies is low anyway, and they're not even profitable on a GAAP basis, but we will talk more about that later in this video. Now, what's extremely bullish and positive about this is that this recent report has indicated that their business growth performance is absolutely phenomenal, and there are a multitude of factors to look at to prove this point. Palantir is growing their commercial segment by leaps and bounds, especially during the fourth quarter. For instance, in the fourth quarter, the company added around 34 new customers on a net basis, which is fantastic news. So they are constantly acquiring new customers, new relationships, and landing new contracts for their commercial segment. And I have been saying this for a while, that eventually their commercial segment is going to outpace their government segment, environment, and analysts are jumping on board with my analysis. This also means that in the future, Palantir Technologies could continuously land more commercial clients, which is going to be absolutely fantastic for the overall company, their revenues, free cash flows, earnings per share, and of course the PLTR stock price. This also means that Palantir is diversifying their business and they are penetrating more of the commercial segment, because right now the bearish argument against Palantir says that they are too reliant on government contracts and government agencies. Well, Palantir is actually gravitating away from government contracts because their commercial segment is just scaling so much faster. And we see this plainly if you look on screen. For instance, for the Q4 results year-over-year growth and margins, the total revenue growth was around 34%, which is absolutely amazing. For their government revenue growth, they increased their government revenue at around 26%, which is not bad. Anything around 30% is actually pretty good for a company. However, if we look at their commercial revenue growth, that grew by 47%, so it is scaling literally almost twice as fast as their government revenues. And if we look at their US commercial revenue growth, that increased by around 132%, which is fantastic news. I also want to add that their adjusted operating income came in at around $124 million, which equates to a margin of around 29%, which is very impressive. And their adjusted free cash flows came in for the quarter at around $104 million, which beat analysts' estimate because analysts actually only thought that they were going to bring in around $80 million worth of adjusted free cash flows, which is fantastic news. This means that they brought in over $420 million worth of free cash flows, again beating estimates. And the reason why free cash flows and adjusted free cash flows are very important is because we can actually use these metrics to calculate proper price targets and price predictions. So what we really want to focus on is that their commercial revenues grew almost by 50% year over year, and their commercial revenue growth has been absolutely outstanding, specifically for US commercial customers, which are where all the big wigs actually operate, and that grew by around 130%, which is fantastic news. This is really enticing because it means that their smaller business segment, comparatively speaking to their government contracts, is growing faster than their larger government business, and this has very positive implications for PLTR stock and their future revenue growth. Palantir's Q4 commercial revenue growth was actually higher than their commercial revenue growth because in Q1 their commercial revenue growth grew by around 19%, that scaled up in Q2 to around 28%, it increased again in Q3 to around 37%, and in Q3 we saw an increase of around 37%, and in Q4 it increased again to around 47%. This means that in Q1 of 2022, we could easily see a revenue growth rate specifically for their commercial revenue of over 50%, so that's not even that far out. So with very strong commercial momentum for Palantir Technologies, this is overall fantastic news. I also made a video that Palantir appointed a new EMEA operator, which is Felipe, who actually came from Oracle, so that is set to help Palantir tremendously, and it's also going to help them diversify across the globe for organizations outside the United States. They also have very strong commercial ties with companies like Airbus and Ferrari, and I also did a video on that. So specifically for their revenue and free cash flows, which are the things that I was the most impressed with, they beat estimates for their revenues and free cash flows, yet the stock price still decided to fall. And this is no surprise because the overall stock market and the major indexes, such as the Nasdaq, the S&P 500, and the Dow Jones Industrial Average, these are all falling right now, so it only makes sense for Palantir Technologies to fall with them. Now I want to talk about their profits. So Palantir right now is not profitable on a GAAP basis yet. However, they are making progress to eventually achieving profitability. Their operating margins for the last year has basically been in the range of 29% all the way up to 34%. And although this is very good, if we could see an improvement on this, this would help their overall profitability. One of the reasons why Palantir is losing money and that they're not profitable on a GAAP basis or a generally accepted accounting principles basis is that this actually incorporates in their stock-based compensation. Now, if we don't count their stock-based compensation, they are a profitable company, but on a GAAP basis, they are not a profitable company. So if management can dramatically slow down their stock-based compensation or even stop it altogether, Palantir could literally become a profitable company as soon as management does that. So to me, management is literally just waiting for the company to scale more, and then they are going to start pulling back dramatically on their stock-based compensation over the next probably 8 years, and and that is what's going to have Palantir achieve profitability. The reason for their stock-based compensation, because it draws major talent and engineers into Palantir Technologies so they can continuously improve their various technologies and platforms, giving them a huge technological and competitive advantage compared to any competitors. So although Palantir and their PLTR stock has underperformed the overall market quite a bit in the last few months, the company overall fundamentally is still very solid, and the only reason why we saw the PLTR stock price drop by around 10% right after their very positive earnings report, in my opinion, is because the overall market and the indexes are also falling right now. So it's not like only Palantir Technologies is falling. A plethora of other stocks are falling with Palantir Technologies, and this is just due to macroeconomic factors. But overall, Palantir delivered very solid Q4 results and full year 2021 results, so Palantir investors can actually feel very proud of this company right now. They outperformed their revenue expectations, and their commercial revenue growth continues to accelerate, and we could see the strong momentum remain strong all the way throughout 2022. We also know that Palantir Technologies can almost achieve profitability whenever they want, and that is mainly due to their stock-based compensation. However, some bears and naysayers out there will argue that Palantir is still technically overvalued, and I would say it depends on what metrics we use to determine if Palantir is overvalued. For instance, if we use the PS ratio, or price over sales multiple, which is approximately around 14 times this year's sales, that is not too expensive, especially for a company that has a huge moat, strong growth over 30% for their revenues, very high gross margins, and a huge growth runway on top of a gigantic addressable market. So paying a slight premium or a PS ratio of around 14 times does not seem that outrageous. However, ideally, we would want this to be in single digits at around 9 times. For instance, Microsoft right now trades at a PS or a forward PS ratio of around 11. So if Palantir Technologies can actually fall below Microsoft at 11, or even preferably to me around 9 or 10, that would be fantastic news, just making the stock an overall better buy. So in conclusion, they did fantastic for their revenues, they beat their adjusted free cash flow estimates, they underperformed their earnings per share, and management can actually achieve profitability whenever they would like. However, they currently are still scaling the company right now. So overall, this was a very strong report from Palantir Technologies, and the reason why the PLTR stock price is falling right now is due to macroeconomic factors, and because the overall stock market, along with the stock market indexes, are also falling right now. So I would love to hear your thoughts down below. Remember to smash that like button right now, subscribe if you are new, and I will see you in the next YT video.